A lot of you are accidentally going against the market's flow, fighting the trends without even knowing it. Or maybe you're scratching your head wondering what's this trend thing anyway. No stress. I've got a dead simple fix for you. The simple moving average or SMA. If you're new to this, it's just a line that smooths out all the crazy price swings so you can see if the market's climbing, dropping, or just chilling. Pretty handy, huh? Here's the fun part. Let's toss it on your chart. If you're using TradingView, just cruise up to the indicator section at the top. Search for simple moving average. And bam, add it to your chart. Alright traders, so we've got this 9-period SMA sitting on the chart right now. But honestly, it's not doing much for this strategy. We need something with a little more juice. Let's tweak it. Head over to the SMA settings with me, and in the input section, you'll see length. That's just how many candles the indicator uses to draw that line. A bigger number smooths things out, cut the noise, while a smaller one makes it jumpy and super sensitive to price swing. For what we're doing here, 45 works like a charm. You'll also see source. That's the price it's based on, like high, low, open, or close. I'm a fan of close, but you pick what you feels right. No need to mess with the offset though. Leave it alone. Now here's the secret sauce nobody's probably told you about. Smoothing. In the same setting menu, switch the type to SMA plus Bollinger Bands. What's that do? It slaps Bollinger Bands onto the chart, but they're built off your adjusted SMA, not the raw price candles. Cool, right? No need to touch the length or offset here either. They're good as is. Next, flip over to the Style tab. Since we're really just after those Bollinger Bands, not the SMA line itself, go ahead and turn off the Moving Average option. From there, it's up to you. I like messing with the line thickness and colors to make it pop, but you do you. So, we've got the Bollinger Bands added to the chart. Right now, you can see the price candles are staying above the upper bands. When this happens, it's a clear signal of an uptrend, meaning the price has been constantly rising over recent periods. So, when the price is staying above the upper band, it shows a strong upward momentum. Now let's switch it up. If the price candle is moving below the lower Bollinger Band, that's a sign of downtrend. This means the price has been dropping steadily, falling outside the lower edge of the bands. The lower band acts as a boundary. A price breaks below it indicates the market's been heading down for a while. So traders, we nailed down the market trend direction. That's all you need to know for now. So don't start throwing in a bunch of complex stuff. The real deal here is figuring out when and where to enter trades to make some solid profits. For this strategy, we're keeping it simple and using trend lines. No need to panic or rush in. It's a straightforward, I promise. Let's walk through an example. You've got your chart up and you can see the price candle sitting above the smoothed upper Bollinger Band. Clear uptrend, right? Now, what do? We wait. We're waiting for the price to drop back and retest the Bollinger Bands, meaning it touches or get close to it after pulling back from a high. When the retest happens, grab your trend line tool. You're going to connect swing highs, the peak points of that pullback wave that just hit the band. This pullback is what we call a corrective wave, a short dip in the uptrend. By drawing the trend lines across those highs, you're setting yourself up to catch the next push higher, the impulsive wave. On your chart, this trend line will slope downward slightly over the corrective move. Here's the key moment. Watch for a candle that closes above that trend line you just drew. That's your bullish breakout, your signal to buy. It shows you the price is done pulling back and ready to climb again. For money management, place your stop loss just below the most recent swing low, the lowest point in that pullback before the breakout. Then set your profit target at 1.5 or 2 times the distance from your entry to a stop loss. So check your chart. When those price candles are sitting below the lower band, that's your sign of a downtrend kicking in. What do? We wait. We're holding up for a price to bounce up and we test the Bollinger Band. Just a quick pop-up after dropping. When that retest hits, grab a trendline tool and connect the swing lows of the wave that touched the band. Here's the move. When a candle breaks below that trend line, that's your signal for sell. For the smart play, set your stop loss just above the recent swing high. Then lock in your profits 1.5 or 2 times the risk of the trade. That's it, nice and easy.